We are back in the black hole of real estate. Today, we're going to give a little love to our veterans out there, talk about how they can purchase with as little as no money down with a VA loan. This is your host, Ron Weiss-Sakarski for the black hole of real estate. And it is true that if you are a veteran and you want to purchase a home, there are some great ways that you can be helped out with a VA loan. The requirements aren't that big. You need a D214, so if you're a veteran, that's your discharge, right? And you need an eligibility certificate, which means you're eligible to apply for a VA loan, and that's it. So just those two things. And if you're worried about saving up for a down payment, many times you can qualify for $0 down, no money down. And if you're worried about closing costs, it's allowable for the seller to pay for most or all of your closing costs. And what they do is they put in an addendum into the contract. And what it says is that the seller will pay up to 4% of the purchase price. That can be used for closing costs, prepaid items, things like that. Could even be paid to, money could go towards buying down interest rates. So I want to take something that's really simple and keep it simple, but I also want to explain, why it's a good thing, how it works, and is there anything that you should be looking for. So if we were to take a home price of $300,000, median in this area, maybe just a little bit more, but let's just use 300 for the moment, round figures. You're going to have a $0 down payment. You want help with the closing costs, so you could say, listen, I'll pay you $300 as long as you give me 4% of that amount that I can use towards closing costs, prepaid items, buying down my interest rate. So that's $300,000 times 4%. It's $12,000. Now keep in mind that to the owner, it's not really a full price offer if they're listed at $300, because it's $300,000 minus $12,000 is $288. So even though the offer says $300,000, it feels like $288,000 to the seller. And if we want to have something that works, then we have to have it where it makes sense to both parties. So if they knew as a seller that they would accept $288,000, well, that could be a cash offer, it could be a financed offer, or it could be this type of offer, which some would call it creative financing, but you have to have the full price at $300,000, then remove the $12,000. You can't add it on top of your loan. And I believe there's probably old wives' tales, if that's what you call them, out there where, hey, I want to buy that house and roll all the closing costs in, so no money out of pocket. Okay, well, that's sort of what this does here. But what you can't do is offer $288,000 and then finance $12,000 more to pay your closing costs. And it's a little nuance of the dollars, but it has to be the high number first, reducing it by the seller concession. That closing cost assistance is called seller concession to arrive at the number. Now, about the only thing initially that could really mess this up is now the house has to appraise at $300,000 because that's the total amount of the loan size and collateral. And for the seller, they're thinking, well, geez, if it appraises at $300,000, that's great, but I'm really only getting $288,000. And here's the one thing that could run you into trouble, at least initially. Let's say you clear through the inspections, everything goes well, but now you've got the appraisal. The appraisal is for the bank, and that's going to evaluate the property and make sure that collateral is worth at least as much as what's being lent out. So let's just suppose for a minute the appraisal comes in at $295,000. We're missing $5,000. Well, the loan at $300,000 with no money down cannot happen with a $295,000 appraisal. Cannot happen. So if the buyer truly doesn't have the $5,000 to make up the difference, and it has to be their own money, it can't be concessions, it can't be closing costs, that's a down payment, it's different. So what we run into is that the buyer would, through their agent, if they're using an agent, would say, hey, listen, the appraisal came in short $5,000. You got to drop the price $5,000. Well, the seller was doing the buyer a favor by giving them $12,000 in closing costs, concessions. So a seller would typically say, well, great, you know what? We'll drop the price $5,000, but we're going to drop the concessions $5,000. So now you're getting $7,000 in concessions instead of $12,000. And if you don't need all of it, that's okay. But if you need every bit of it, we're still missing $5,000 over here. There's only so many places to get it from. So the appraisal could really be the thing that throws it sideways a little bit. I've seen the price get lowered $5,000, similar to this scenario. I've seen the sellers not take away any of the closing cost assistance. They just drop the price $5,000. I see the buyers miraculously coming up with $5,000 out of some back pocket nobody knew existed. And I've seen them negotiate, hey, you know what? We both want to make this deal happen. What if we split it? I'll come down $2,500 on the price. You'll come down something on the concessions, or any mix of things that adds up to the missing money. And when there's a spirit of cooperation where both sides want the same outcome, which have a closing, one wants to buy, one wants to sell. If you're open-minded and you're thoughtful and staying out of the emotions, and boy, getting emotional about this is tough because it's just math, then there is a way, a lot of the times, to resolve what seems like a big problem. And I want to remember to tell you that most things can be solved if we have thoughtful conversations and not get combative with each other. The role of agents is to be a messenger if there's agents involved. We shouldn't be, balling up our fists and threatening to knock people out, figuratively and literally. Let's just say, it's like, hey, a lot of people are brave behind the keyboard. They're brave when they're texting you. And first, not so much. So I don't know that I've ever seen anybody duke it out over an appraisal price, at least not with fists. Maybe typewriters and keyboards. But you get the point. So keep in mind that the appraisal and the closing cost mix can throw you for a loop unless you know how to do it. And I've given you the formula. So you might just be okay. But if not, there's a lot of really good agents out there that can help with that. And you could definitely drop us a comment and we'll answer that for you as well. But the components are pretty simple. You apply for a loan. You want the no money down VA loan. You got your D214, your eligibility certificate. You get to the inspections, pass those. You get to the appraisal. If there's a differentiation in value, you get that fixed. And all of a sudden you do final underwriting and it's, hey, hurry up and wait for closing day. So, it can happen all in about a 30-day timeline. But what a gift. If you're a veteran that you can literally, for no money out of pocket, no down payment, closing costs paid, own a home. And with the cost of home ownership, even at the higher interest rates, still way below the cost of renting, it's a really good thing. And I hope that most people at least consider it or take advantage of it, if you will. A lot of people are reluctant to use their VA funding opportunity. Some sellers are really nervous about accepting a VA buyer because, the inspections will be harder, or the appraisals will be harder. Well, not really. Are they a little bit more in depth? Of course. But with the insurance companies rating policies the way that they do, and it's really a 4-point inspection what it comes down to. So if your plumbing is good, your electrical is good, your HVAC is good, your roof is good, you got it mostly licked. Then it's just value. And appraisal value isn't a function of a VA appraisal. It's the appraiser's opinion of value based on the comparable home sales within a couple of miles. The math is the math on that. There's not a lot of change there. So if I'm a seller, I would be extremely open-minded about selling to a VA buyer as long as the price and terms made sense. It could be a really good thing for everybody involved. to make that happen. So that's a little bit about what I would do. You know, if I was in a situation and I was working with a VA buyer, or I was a VA buyer, that would be the path we'd follow. I hope this helps you on a strategy for a veteran who doesn't have enough money to purchase a home or pay the closing costs, but can make the monthly payment, especially because it's probably less money than the rent that they're paying right now. All right. If you got questions, please drop them below. Definitely subscribe and tune in for the next episode. This is Ron Wojciechowski for the Black Hole of Real Estate.